Hey everybody, happy Thursday. Welcome back to another trading video. We're going to be taking a look at markets for the days and weeks ahead. I am back from Greece and happy to be back. Definitely missed kind of doing my daily videos. Of course, Greece was absolutely beautiful, and I'll include a few pictures on the screen for you just in case you guys would like to take a look at what was going on. I went there for my sister's wedding and it was absolutely gorgeous. The wine was wonderful. The bread was great. The food was amazing. Oh my goodness, I think I might go back next week just to go get another round of food. It was so good. Anyways, I'm back a few pounds heavier and ready to take a look at some charts. Let's jump right into things. So the stock market has been continuing to see a big push to the upside. I have been a little bit bummed out by this, to be completely honest with you guys. I wish I was long right now. I have discussed this a good bit. I went long and basically caught the bottom of the S&P 500's move to the upside, but then trailed out right around this area. So I trailed my stop loss, got taken out for a profit, but then the market has sort of bottomed out and found a new high. So where we currently are, I do think that I'm still bullish on the indices, but would like to wait for a proper pullback before getting involved. And I may sound like a broken record if this thing continues to trend higher. I'm not going to chase the S&P 500 or the NASDAQ or the Russell or the Dow or any of these things. I'm not going to chase them. But I will look for breakouts and retests, perhaps of key levels of support. So I remain bullish. I have been bullish, although I got a little cheeky with my exit and I felt really smart for a minute there. It ended up being the wrong call not to just look to re-enter my trade, and that's fine. It happens sometimes. The S&P 500 has had a very strong September despite recent years being historically negative for this month. In fact, I'll show you that now. So the S&P 500 on a 10-year average basis shows that the average month of September has actually been negative for the last few years. And that does not mean every year has to be negative. Clearly, this year was an example of an exception to that rule, right? And this is the thing about any indicator or metric that you use to try and make trading decisions. Nothing is foolproof. Nothing never is wrong. Everything has chances to be right and chances to be wrong, and all we can do as traders is make educated guesses. So my educated guess for the month of September was completely wrong, which was I'm going to stay on the sidelines for the indices, wait to see if we get a bit of a corrective move during the month of September, and then perhaps look to buy opportunities then. I was wrong, and that happens, right? So depending on what you use for your metrics, it does not matter what you choose to analyze the markets with: fair value gaps, moving averages, GDP numbers, COT data, PMI, retail sales, inflation, CPI. It doesn't matter which one you pick. Everything is going to work sometimes and not work sometimes. And all you can do as a trader is make educated guesses based on your due diligence. That's all we can do as traders. So if I take a quick look at the EdgeFinder's current readings, we push forward and we look for setups that do actually show promise potentially now. And what we can see is things like dollar Swiss caught my eye here this morning. Some of the yen cross is looking potentially interesting, and so on and so forth. So there is a current top setups reading. And if we take a quick pulse check on the stock market for a moment on the economic data front, we can see GDP numbers did come out this morning as expected, 3% on the final GDP number, which shows a 0% change from forecast. So get a bit of a neutral reading there. Now, on the manufacturing data, we could see that's been a little bit of a disappointment. On services PMI, about flat there. If we take a look at retail sales month over month, we can see that was a beat. We had a beat in CPI year over year, a miss in CPI month over month for core, right? Core CPI was a bit of a miss. NFP was a bit of a miss. Unemployment rate was a beat. Now, why am I showing you this chart and what does it matter to you? Well, if you're an aspiring fundamentalist, then this data should mean everything to you. These are some of the key metrics that we look at to make better informed decisions about the state of the US economy. And where we see this currently is a bit of a mixed jumble of puzzle pieces, right? We don't see anything really lining up to show us whether or not the market is seeing a very strong US economy or a very weak, very slowing US economy. It seems somewhere in the middle. And so I don't have a strong bias. And so when I take a look at the US stock market as it currently stands, I actually don't have a very decisively bullish view on the stock market at these current levels. Now, if you show me in a week or two the stock market has fallen by 2-3%, then I might give you a different answer. But at current levels, I think the risk to reward is not quite there. So when I look at the NASDAQ, when I look at the S&P 500, I am preferably waiting for pullbacks to get involved in these things. Or if we see breakouts and retests of highs, then maybe I will look to get involved if the economic data lines up. At the end of the day, what gets me into trades is not a pretty chart or a breakout or anything like that. What gets me into a trade is if the fundamentals actually support a continued rally or a reversal. The Dow Jones is another one that is very much on my watch list currently. In fact, I'll mark up this level here and we're going to go ahead and I'm going to keep that alert there, but I want to take off some of these other dotted lines. Let's get rid of this. Let's get rid of this. So I've got a level of support here that I am watching for, a potential retest around the 41,500 level. I do like the Dow Jones. And if we take a look at the top setups page and we just go to, let's actually just add only the indices for a moment before we push on to the next thing, you can see that the Dow Jones is getting the highest of the indices readings currently. And in the month of September, we saw a negative expected seasonality. But in the month of October, it is about neutral, which will change these scores and perhaps give us a bullish reading on the Dow Jones. Now, on the technical price action side of things, I will be waiting for a pullback before pulling the trigger on anything. But if we don't get it, I'm not going to trade it at all. Turning our attention to gold, we can see this thing continues to trend higher, and what a great year it has been for gold. Rate cuts everywhere seem to be the trend here, and that is definitely supporting a continued rally in the price of gold. Now, same thing here. It is the summer of rallies, it seems like, and trying to call a top on gold has been a painful lesson to many traders. I can say that for sure, because I've seen many comments and emails from people who have been trying to short gold, who have lost everything doing so. Please don't be one of them. Remember that if you're going to take a trade with a very small size, and that way you won't get yourself into terrible circumstances trying to get rich quick. I'm telling you, I get those emails, DMs, and messages on my YouTube channel all the time. Don't be the next one. Trade small, be patient, and grow your trading account the old-fashioned way, slow and steady without gambling. All right, so when we look at gold, where am I at with this one? Well, I don't have a position on. I traded gold long many times this year, but I'm not currently in it. I got actually trailed out right before this recent rip, which before you start getting too bummed out for me, don't worry. I did actually end up turn around and buy silver, which ended up being the even better play. With the recent rally in silver cresting at one point a 18% gain since this low, if we take a look at the comparable move in gold, that move is only about 8.6%. Many people don't realize this, but silver is actually the more volatile metal by far. Silver moves a lot more than gold. And if you're using an FX broker trading a CFD, you may not realize that because lot sizes are a little tricky or deceiving. But if you actually take a percentage basis and take a look at the options market, silver, SLV versus GLD, options expected moves are usually much bigger for silver. Silver is the more volatile metal. That being said, silver still looks good in my view as long as we continue to hold support. Now, I do have my stop loss trailed on this trade, which was sent inside of our VIP room. I've got it trailed just below this market structure low. So if we break that, I'll take profits on the move. And if we continue to rally, I'll look to tighten my stops further into profit. And because I just mentioned it, if you'd like to get access to our Discord VIP room, you can see all the trades that I am taking as well as Frank and Ivan. And we do have a new service as well for those of you who are already VIP members and don't yet have access to Chris Pulver's trades. Here's some information. The first link in the description, chat with a member of our team. We'll get you set up with Chris Pulver's trade alerts. He trades everything from futures, stocks, Forex. He's very active in FX, commodities, indices. He trades all of it. And he's a regular contributor to the A1 trading community or to the A1 trading live stream. You may have seen him. We'll show a picture of him right now on the screen. But definitely check his alerts out if you have not already. And if you'd like to get access to my trade alerts, the link and promo code will be down below in the description. Or if you'd like to pay with crypto or ask any questions before purchasing access, you can do so by clicking the first link in the description down below. And another big story here recently is actually the oil market, which continues to sell off today off of the news that we got out of Saudi Arabia. Looks like they're going to not be so restrictive on their production and sell side supply that they offer into the global market. Now, if that sounded like a bunch of words, basically Saudi Arabia is a big oil producer and they govern how much oil they sell to the open market to help bolster the price of oil, right? If you have all the oil and you choose to only sell a little bit of it at a time, obviously the price of that available oil will go up. But they recently reversed some of that and actually decided to not be so restrictive on the supply of oil they sell, which has caused oil prices to fall because, again, more supply means, more available, less demand relative to that available supply. Now, that helps the inflation story. Remember, falling oil prices are good for the inflation story, which arguably is good for the stock market as well. Now, another story that is huge right now is China. And if you're a commodities trader like myself, watching silver or copper or even oil as well, this could act to continue to support commodity prices. Remember that the second biggest economy in the world is China. And if the Bank of China, the PCOB, basically comes out and wants to put more stimulus into the economy, which is what they basically propose to do on a pretty massive scale, that could actually turn the stock market and Chinese economy around and get things really going. A strong Chinese economy, which is a huge manufacturing economy, could greatly increase their demand for things like copper and, of course, oil as well. Look at copper, by the way, guys. Copper has been trending up aggressively here recently as commodities get a little bit of a bid amidst rate cuts and, again, a rebounding China play could be very interesting going forward. Taking a look at the put-call ratio, we do see a slight skew towards calls again as traders are feeling a little bit more confident about this market. Now, please be aware that when the put-call ratio gets too low, what that usually signals is that the market is starting to feel pretty greedy, right? The demand for calls is getting very high. Well, we're starting, in my view, to get a little bit close. We're starting to get more on the extreme call side. And what that does signal to me, just like the opposite signals potential buying opportunities, a extreme low in the put-call ratio could signal that the market is getting a little bit frothy, a little bit over-optimistic or greedy, and perhaps there is some pullbacks that are due to be coming. So I'm watching that for the stock market side of things. While we're on the stock market side concept for just a moment, we can take a look at the AAII Investor Sentiment Survey, which shows us investors are feeling pretty bullish again at 49.6% polled in this survey, reporting that they felt bullish, and only 23.7% feeling bearish. Very, very low relative to recent readings. And again, kind of goes off of our contrarian signal to potentially get a bit cautious on the rally that we are seeing. Doesn't mean get bearish. You may have a signal that tells you to get bearish or something like that. But for me, this just signals, okay, let me be cautious. Let me not add a whole bunch of long positions into a overly sort of greedy or very optimistic crowd sentiment. Remember that these tools are available on the Edge Finder. If you don't have a copy of the Edge Finder, we'll leave a link in the description down below to purchase a copy. Or if you'd like to try it for 30 days, you can use the first link in the description down below to chat with a member of our team who can set you up with a trial. Thanks for watching, and we'll see you next time. If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, 8cap. 8cap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your 8cap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out 8cap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.